regardless of who actually wins the election, we are very likely to see some very short-term volatility. Happy 4th of July. I hope you're enjoying the holiday here and gearing up for a nice weekend to come as well. We have a ton to cover around data, but also want to make sure to touch on some things around the election. Obviously, the presidential debate is fresh in everyone's mind, as forgetful as it might be, and we want to kind of touch on briefly how the election impacts the markets ahead and what we're kind of seeing as we get closer to elections and into 2025. My name is Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue. And our goal every Thursday is to bring you the market news, the data, the trends that we're watching, hopefully weed out a bit of the noise along the way. And certainly the noise theme is very relevant right now after the recent debates for the presidential election. But we'll get to that as we wrap up with our question of the week, really talking about how the election may actually impact markets and some things to consider as we get closer to the end of the year and again into 2025. Before that, there's a lot to cover around the data side of it. So last week, we wrapped up with a ton of data around inflation and the consumer. So first thing I want to highlight is around personal income. So personal income was actually up 0.5% for the month. Spending was up again here as well. You may remember this was something we were really paying close attention to last month because of some of the spending numbers and how it reflected the consumer reflects in the economy. But spending was up 0.2% here this month. And maybe one of the bigger stories, although not much to write home about necessarily from the data that came out, was that PCE was flat. So this is a measure of inflation. PCE was flat, and core PCE, which again takes out food and energy, was up 0.1%. But both were right in line with expectations, which is why I say not a lot to consider really here. And it puts the year over year inflation data at 2.7 for the headline number, 2.7%, and 2.8% for the core number. So again, taking out food and energy. Obviously, the markets are actually closed today for the holidays. So hope you're enjoying some of this sunshine if you're in the Pacific Northwest. But you can take a breather as far as the markets go. Certainly nothing to worry about on that front today. They will be open again tomorrow, though. So certainly interested to see how we finish up the week here and start the not just the month, but the quarter of this quarter of 2024. And then lastly, a couple things here that came out this week to cover before we get into our question of the week. The first is on Tuesday, we had job openings numbers come out, and basically that job openings number showed that 8.1 million job openings were out there. So this was interesting because it crept up a little bit from the prior month. You might remember that basically last month when we were talking about jobs, there was some data that might suggest that jobs were starting to cool a little bit, or the labor market was starting to cool a little bit. And it led to a scenario where many believed that this was the Fed's opportunity to start cutting rates because they had started sharing that they're paying attention to the labor market for rate movements. So again, saw job openings creep back up. Now on the flip side, yesterday on Wednesday, we also had ADP employment report come out, and that says that we added only 150,000 jobs for last month. So kind of conflicting data here in terms of how to interpret this for what this may mean for the Fed. However, remember that this report suggested lower jobs last month as well, for the month of May, I believe it would have been. But non-farm payrolls came out that same week with a very hot jobs number. So take this ADP employment number with a bit of a grain of salt. We will be really paying attention and be sure to tune in next week. We'll catch you up on the data point on Friday, which is the non-farm payrolls number. Because that generally is going to be a little bit more of maybe an accurate measure and certainly something that we want to pay attention to in terms of how jobs may relate to some of the Fed decisions ahead. So tune in next week. We will cover non-farm payrolls for the data point tomorrow on Friday. And then we will also cover more inflation data. We get consumer price index data next Thursday as well. Before we wrap up for the week, though, I do want to touch obviously on a very timely topic, which is the election impacts to the economy and the market. And I want to keep this a little bit brief, although we may spend some more time on this soon, because obviously as we get closer and closer to November, this is becoming a very important topic. And what I will share just to kind of summarize this is that we believe that the election itself will add some short-term volatility, right? So as we get closer to November, I think that regardless of who actually wins the election, we are very likely to see some very short-term volatility because it's such a polarizing election year, right? However, over time, and we've seen this time and time again looking historically as well, generally cooler heads prevail and the markets actually get back to the fundamentals. They actually get back to what matters, right? So I think that, if I can summarize a little bit, I think that in general, just be aware that there's very likely to be some short-term volatility as we get closer to November. But typically, if we actually look ahead, the actual election itself has very little correlation to market performance to come. Now, to be clear, this would suggest that maybe the election doesn't make an impact, but I will say that policy certainly can. And one of the biggest things to focus on is taxes as we look ahead. And the reason I share that is that many of you have heard us share this before, but there is a tax bill that was passed back in 2017, and that is set to expire at the end of 2025. So likely, and we heard a lot in the debate about tariffs as well, but likely tax landscape reform might be a significant part of the conversation. Now, if you're interested in more information on this Tax Cuts and Jobs Act, is what the tax bill was called, expiring, check out our website. We actually put a whole blog out there, mainsailfg.com. And in our blog section, you'll notice the blog on the Tax Cuts and Jobs Act. But I will share that, outside of focusing on that specifically, I really don't think that there's likely to be much tax shift. Now, obviously, if nothing happens, we revert back to the old tax rules, which certainly could mean some slightly higher taxes ahead, but it doesn't appear to be a significant shift. So in general, I think that it's very unlikely that we see anything get through Congress in that priority or in that year necessarily. But it is something to pay attention to because, again, policy certainly can impact markets and the economy, but the election in and of itself in general historically has not. And again, we might see some short-term volatility, but as we look ahead, generally cooler heads prevail. We actually get back to the fundamentals and what matters, and we can focus on, where we go from there. So we will spend more time on this as we kind of get a little closer, but I did want to share a little bit of a summary version since obviously this is fresh in everyone's mind. So in the meantime, have a great 4th of July and upcoming holiday weekend. We'll see you next Thursday at 3.